Hey Houston, it's Dinko, the realtor. We know that the market is shifting and that the great correction is upon us. So I want to show some data points here that shows what's happening currently in the market. So let's take a look at, actually let's go to March here. So if we take a look at March, prices in 2022 were 410 and inventory here from a year ago remained unchanged. And if we go to April, it goes up from 410 to 426 and months of inventory actually went up, but so did the price. And then if we take a look at May, inventory went up again 1.6 and so did the price to 440. So this is kind of showing us that fear in the news can lead to things that are not really 100% true. So inventory was going up, and believe me, the market wasn't as crazy as it was in 2021. Showings that I had on my listings weren't getting as many showings, but yet I was still getting these really strong offers. Now let's take a look here. So if we go back to May, so May is 440, average months of inventory 1.6, so it's up from a year ago. And inventory keeps going up, but so are prices. And then in June, the single family average price of a house is 436 compared to 440. So June was the first month that we are seeing a decline in home values. And in the rest of the country where the markets kind of explode, I'm talking about big metros where people are moving into, they started slowing down in about April and May. Houston started slowing down in June. So Houston didn't appreciate as much, and Houston's one of, and I think it's probably the best job market in the nation. So the correction kind of took a little bit longer to get to Houston. But the one con to all of that is Houston's land mass is huge. There's no zoning laws when it comes to building, and it is the leading metro when it comes to new construction houses that are hitting the market and are going to hit the market. And remember, there's that backlog of homes that's going to start hitting the market here in the fall and in the winter. So now let's go back to the charts here. So in June, 436, months of inventory is 2. And then if we go to July, it goes down to 426 and months of inventory is 2.5, so 2.5 months. And what that means, months of inventory, is if no new house hit the market in 2.5 months, every single house would be gone and there would be 0 homes for sale. That's kind of what it means. It's kind of a gauge. It's not really 100% reality. It just helps us gauge what's going on in the market, what the inventory is like. They take the sales, they take what's currently in the MLS. So there's some statistics to it. It's pretty accurate, but of course nothing's 100% accurate. Now, if we go from July to August, we see that the months remain the same, 2.5 to 2.5. And the average home price fell to 411 from 426. Now the July, so and the data is always about a month and a half to 2 months behind, because everything that went under contract 30 to 45 days ago, 20 days ago is closing. Then by the time they collect that data, put it out there. So the market is actually about 1.5 to 2 months, at least about a month and a half ahead of what it is in the statistics. And then the news catches this even later. So the news is like 2 to 3 months behind. The data is probably, let's just say, about a month and a half, best case scenario. And then you got reality of what's really going on. And July, when the interest rates exploded in June, July was the worst month. Almost 20% nationwide buyers backed out of their purchases. So meaning, I think it was 16.8%. So they go under contract, they back out either because of an inspection, financing, payment shock, whatever it is. They decide, I don't want to buy this house. So July was the worst month when it comes to that. And if we take a look here, you'll have people saying the market is stabilizing. Well, let's go back to the chart that I had in the previous video of the two bubbles comparing the crash and where we can end up. I'll link that down below if you want to take a look at that video. But right here, we see that right here in San Francisco, it looks like the market was stabilizing and then it just goes down. If we look at all the charts, it's not like the stock market. It doesn't just plummet overnight. So right here in Seattle, it looks like it's for a little while here stabilized, then boom, hits down. Looks like it's stabilizing, then keeps going down. And I think it was Portland that has kind of a couple of drops. So see, Portland looks like it's stabilizing. Prices actually go up and then they go down. So I want to take a look at Phoenix here and Las Vegas, because they're kind of indicators. everything just exploded for no reason over there in 08, 09, and it was artificially the subprime mortgages. And that's kind of what's happening right now with all of the low inventory, the low interest rates, the fear mongering that we had in the news media, all the supply chain issues. So it is an artificial explosion that we had in the housing market. And if we take a look here, even in Phoenix, it looked like it might have been kind of stabilizing. You know, it wasn't going to just full out crash, and then it just kind of dropped down. And same thing in Las Vegas, right? It looks like it's a little bit actually steeper. It looks like it's kind of stabilizing for a split second, starts. But if you can see, it took a whole year for all these markets to start falling, maybe even a little bit more than a year. And some of them took even 2 to 3 years because they're falling down. Prices was a little bit more gradual. So when people say the market is just stabilizing based just on what's going on in the real estate market, I'm always hesitant to say that, because the real estate market is not like the stock market. It doesn't just go down and up overnight. Though during the pandemic, it kind of did go up. It seems like, you know, month to month, and it felt overnight. But again, it wasn't overnight like it is with the stock market. So right now, the data points are showing that the sales that are coming out in September, remember, all of those went under contract in August, and it shows that the prices actually went up in Houston. So we had a couple of months of price declines. Prices then went up just a tad bit, and it's preliminary, so all the data isn't out. It's interesting to see what's happening with the months of inventory, if that stayed unchanged or if that went up, to kind of help us gauge, you know, what's really going on, what affected that price gain. So I'll have that on some of my next videos here into the future, and we'll kind of go over that market update. Maybe next month when I have a little bit more information, I'll do these specific market updates. And of course, I have all this stuff that could potentially cause a crash. So subscribe to the channel. If you have any questions, you can always call me, put a comment down below, hit that like button, and see you next time.